Hopefully, you're doing amazing. So want to do a quick Tuesday trade review, how we did analyze the markets and what did happen. So a quick one will first start from the higher time frame, possibly the monthly time frame. And if I can go back, want us to have these from the current and below. So if we can go to the monthly time frame, what we are seeing over here is that the monthly candle created an immediate rebalance over here. You can see the high of this third candle and below did overlap, and then currently we are somehow rejecting going higher. And the same applied over here. We did create that immediate rebalance whereby we have the high of this candle and the low of this candle overlapping. Then we did have that push going higher, and we did take these candles high. So I have a previous month's high labeled there. So a month's high labeled there, which could act as our draw. But since we have seen the immediate rebalance and we have this previous month's high, we need to drop lower to see whether we can have a context from which area do we expect to have that push going higher. So dropping to the weekly time frame, you can see we have the previous week's high. So if I can push, we have this previous week's high. BW happens to be our previous week as well as the previous month that are in close proximity, and the previous week created an engulfing candle whereby we did sweep somehow the previous week's high. This candle did sweep the previous candle's high, then close below the opening price and the closing price of this candle, qualifying it to be a bearish engulfing candle. So to me, I was anticipating somehow to see some continuation going lower, maybe to tap into these, but we saw the market rally lower that week. Then we did reject higher. With this rejection, it was 50-50. It was I think at equilibrium whether we can go lower or continue higher with this rejection. So I also noticed that we had this fair value area, and remember, a fair value area from the higher time frame, we have it from a short-term high to a short-term low. So from the to the low, we have this fair value area, and since we have buy side being offered, the farthest we want to see a retracement into was this fair value area. We had a tap into that. Also this week we've seen a tap into that, but this fair value gap has been left open, and we did sweep the previous candle's week low. If you look closely, you can see we have swept the previous candle's low, and that was a major liquidity pool. As if we did clear that, then somehow if price shows us bullishness from the lower time frame, then we can target this previous week's high, also this previous week's low. So I dropped to the daily time frame because the weekly ain't really clear. We were forming a bearish engulfing candle from which I did have this range. You can see we have a Fibonacci there, and since it was a bearish engulfing candle, then we have specific levels from which we can anticipate a drop off of that. So we have the 0.25 level from which I wanted to see the market open, possibly continue lower off of, but we opened higher. So yeah, the level we could have watched next was the 0.25 or even the 0.75. So because if we divide this into 4 equal parts, if you get rid of the OTE levels, which are the 62, 705 and the 79, you'll have the 0.75 remaining, and as well as the 0.5. So from the 0.5 level or the 0.75, that was the levels I was expecting a reversal off of, and that was the area I was mainly focusing on. But observing what happened yesterday, I saw this candle closed bullish, and if it were to be bearish, because I was bearish, I sent a given video to the Telegram channel. You can go rewatch it. I wanted to see a sweep of these candles high, then possibly form a bearish market structure. So that's what I was looking for from the daily time frame, until you can see this candle never continued lower, but we had a push higher, which I think we managed to read a price clearly. So from the 4-hour time frame, that's where I decided to focus on the market structure, what the market was doing. And what I realized over here is the market was really not trying to push lower to clear all these liquidities. The market pushed higher, and we tapped into this 4-hour fair value gap, and inside that 4-hour fair value gap, we did respect the midpoint because we had candle closing above. But to me, I was really watching of the OTE level. So I expected at one price was at around this area. I expected a price tapping into that OTE levels. Then we continue lower, if not expecting price to tap onto the 0.75 level, then continue lower. So as price was printing, I usually trade at around 9 a.m. New York time, and that's the candle I want to get them and the expansion of it. So all this price action I had already printed out when I was trading. So what I saw is I saw also the bearish fair value gap being disrespected, this 4-hour fair value gap being disrespected, as well as we didn't really form other 4-hour fair value gaps. So as this push was happening going higher after this candle had closed, I had these 4-hour immediate rebalance level, which I was really watching to have a push going higher because this candle expanded higher. So to me, I was no longer bearish after this candle printed out. So I wanted to see a retracement into this 4-hour immediate rebalance, then a continuation. But that happened. We retraced deeper. I will be telling you what happened. Then we continued higher, from which we benefited a push higher. Also from the 4-hour time frame, what I noticed is we were not really respecting this 4-hour fair value area. From this short-term low to this short-term high, we have a 4-hour bearish fair value area. We saw this candle disrespect. We were respecting over here. Price was respecting this fair value area because it was reacting off that fair value area. But this candle confirmed otherwise, disrespected, and we deeply rallied into the fair value area. Whenever we deeply rally into a fair value area, if you haven't watched the previous video before this, go check onto it because I have explained something about the fair value area, and you will understand. If we see price digging deeper into a fair value area, then we are no longer offering fair value because fair value had already been offered. Now what you're doing, we are seeking liquidities, and the liquidities we are seeking is this previous week's high. So after seeing this candle, then I anticipated to see a drop into this area before a push, and by then I had to drop to the 4-hour time frame, the 1-hour time frame, and that's when I saw this candle printing. Was waiting for a fair value gap to form at around this area, and really patient today. No fair value gap was formed. We saw an immediate rebalance and dipping lower into this 4-hour also immediate rebalance. Then this candle opened at around 10 a.m. We had a drop going lower. I was watching this candle, and I was really trying not to find anything going bearish because price action was bullish, and we are forming other bullish fair value areas. You can see price leg 1, 2, 3. So to me, price action was really bullish, and I didn't want to get involved in any bearish price leg. So as price was dropping inside the 15 minutes time frame, I decided to be patient and wait to see what will be happening, because we had already created this 4-hour immediate rebalance, which I wanted to see price drop to, then react off that. I did post something like that in my Telegram? I will be posting if I didn't post that, as I was expecting push higher of this level, but we dipped lower. And to me, inside this key level, what I said is that we are pairing these stop losses, because individuals who had their buy orders at around this area, if you can have this long tool of that fair value gap, individuals who had their their trade there 1 to 2 had their stop losses below the swing low, right? So this is the trade. Maybe those who are early entry, who did enter early, their trade was inside this fair value gap. Then the market reversed, took their sell orders, and their stop losses in form of sell stops were paired with buy orders, from which you can see the market started displacing, going higher. And as the market was displacing, going higher, I dropped onto the 5 minutes time frame, and of the 5 minutes time frame, we had this fair value gap, from which I had my trade entry, my sell my buy limit there with my stop loss below these 5-minute swing low, but then the market wasn't really tapped into. And then the market rallied straight to my TP, and so the final TP was hit, and was a good lesson. But you can see we had gaps that were created that were never tapped into. Over here we had another gap. So this gap, this breakaway gap was not traded into. We had a higher fair value gap that was first traded into. Then we had that continuation going higher. So for this trade, it was a missed opportunity. We didn't really benefit of this move, but experience wise, we had a good experience and good a good trading also opportunity, but no profits. But I guess it's better the experience, and with time I guess next time I will be handling how I'll be handling this trade. I will be watching the 1 hour time frame. So what was happening around this area is, as this candle closed, immediately we had a small manipulation going lower, and this small manipulation at around 11. Let's see, 11. What did happen at around our entry point? 10:50. We had 11 opening, making a small drop before then this expansion going higher. So this is the 11 candle. We had the manipulation of that candle that created the immediate rebalance with these 5 minutes. So next time, whenever I will be seeing, if we are having a next candle opening, I will wait possibly for the drop of the first, as this candle will be opening, then the manipulation of that candle, maybe have my trade there, and ensure that my stop loss is catering for my stop loss, this open fair value gaps, so that whenever, if the market will tap into that, then we can continue going higher. And I guess with that, unless if I do that, then the lower price action from the lower area should be clear. For this instance, we had a sell stop runs, we had a return into a fair value gap, we had some clear rejections also of this 4-hour fair value gap, as well as we had a 3-hour inversion fair value gap. Let me take you there. We had a 3-hour inversion fair value gap, which was to also push prices going higher, because we had already this candle had already closed above, because this other candle opened at around 11. So this candle was the candle that I called the expansion, and was a good trade, but a good missed trade opportunity. And the good thing I learned is never to be afraid of this push that is rallying against me. Maybe we are creating immediate rebalance. Maybe we are pairing the sell orders with also the buy orders, because for us to be buying, for the large institutions to be buying, they need to have sellers, and sellers are below swing lows in form of those who did have their early entries. They have their stop losses resting below here, and if the market sells lower, meaning a stop loss will act as a sell stop, and that sell stop is paired with a buy order, meaning we have both buyers and sellers, because the large institutions who wants to be buying, they need sellers, and these sellers are in form of these sell stops. So the sell stops are taken, then the large institution come into play with you can see these nice displacements, and the market rallies and clears the opposing liquidity. And yeah, the market did that, and was a great trade and great learning opportunity. So anything else I want to talk about from the 4-hour time frame is that about a fair value area. We had this fair value area that I've talked about, and whenever we see a deep retracement into the fair value area, we are now seeking liquidity, because the market does two things: either we are seeking liquidity or we are offering fair value. Because we had offered fair value over here, we had buy side being offered, then sell side. From these intermediate term low and this intermediate term high from the 1 hour time frame. If we go to the 1 hour time frame, we have this intermediate term low, because we have this short term high or a swing high that is higher compared to this. Also, we have this swing low that is higher compared to this swing low, making this an intermediate swing low. I mean, also we have this other swing high with a swing high lower onto the left, onto the right, as well as this swing high lower onto the right. So from the intermediate term high to the intermediate term low, we have this as our fair value area. And about a fair value area, what we want to see, we don't want to see the farthest we want to see price react off is the low of the fair value area. Then we have a drop targeting these liquidities. But what we saw is price retracing back into this fair value area. And because this area has been fully rebalanced, because we have both buyers and sellers, then we'll no longer be offering fair value, but doing the opposite, and the opposite will be taking those buy side liquidities, which happens also to be a major liquidity pool in form of a previous week's high, which is in close proximity also to the previous month's high. So that's how I did interpret today's trading session. And hopefully as of tomorrow, I will be expecting buys opportunities, but we have CPI also. We will be careful with that. We might maybe pull lower, then continue higher, but long term we want to see possibly the previous month's high being taken. So that is it for this trading day, and that's how I did catch that chance that was also missed. But the experience part of it, because reading it live is not yet easy. I did send this that trade saying that I did my entry hasn't really been triggered to the Telegram group, and if you need to join that, ensure you have also joined, whereby I have some proposal also that I did communicate via the Telegram. If you are a new beginner, then I will be presenting some form to you guys so that you may feel, so that we may also get to plan on how we can get involved. We can get everybody involved in our interactive program that I told you guys. So wait for a given form so that you may feel that, and I guess from there we'll have a gateway going ahead. So that is it for this trade, and that's the trade review, and those are what I did learn today. Majorly, it's all about patience, waiting for whatever you did want to see play out without any fear. Even though we had this drop, at first this candle was really bearish, and it only rallied higher in, I think, 15 minutes, because yeah, in 30 minutes, because at 10:15 these are the 10 the 10 a.m. candle was really bearish. Then around 10:30 we saw this push higher. We had this other push going higher, so showing some displacement, meaning involvement of the large institutions. So it's always good for us to be patient and wait for whatever we have want to see play out. If it doesn't play out, then we go back to the higher time frame and see whether things are changing. So I also sent a given video to the Telegram whereby I was saying that the market will be dropping, but that didn't happen because the price action presented was really bullish, and that's how I did get involved in the bullish side for gold. So that is it, guys, for this video. Hopefully you get to have lessons from this, and if you have any question, feel free to let me know, and I will be glad to answer that, and also to make you guys satisfied, and also to ensure that we get to learn all day every day. So that was our Tuesday trade, and as we close off this trading session, want to wish everybody good luck, and until then guys, everybody be safe and take care everybody.